What are some of the most common misunderstandings that people have when they first come to you?
I think for us, two things and I'll go with these tax credits that so many people are missing because they're easy tax credits. They're easy. They do not take a lot of effort. They're money in your pocket, and they're literally one can be a cash check that comes to you. The other one could be if we're working in tandem with their CPA, they will just take, let's say someone's getting $10,000 in or even $20,000, $30,000 in our research and development tax credit. If we're working in tandem with your CPA, we don't have to amend returns. They can take that $30,000 right off what you owe from the IRS right now. So it doesn't have to be amending returns or something that could trigger an audit. But when we do tax credits, it's a great way for us to get under the hood and just take a peek at some simple things that you might be missing. That research and development is an annual tax credit that we can work in tandem with your CPA. The ERC tax credit, that a big misconception is people are being told they do not qualify. Both of those tax credits, actually. And why wouldn't someone at least look, right? It costs nothing to look, but people have been told incorrectly because of all the changes that were made that they don't qualify. And that's really unfortunate because they think it's going to be too much work. They think they could get an audit. They think that that is it going to cost them too much or it'll take too much time? And actually, the systems and the processes that we have for our clients is so smooth. I always go back to it costs nothing to look. Why wouldn't we at least have a conversation? So if people think they're going to get an audit, we defend people at no additional cost. One of the things that our company does that most firms do not do, we act as if every single client we have is going to get an audit. I will tell you, I have not had one in all these years, not one of my clients personally have gotten an audit. But
Wow.
I want people to be put at ease that when our company has had an audit, there's something called a paper audit. Oftentimes the IRS will say, hey, we want to audit this case. They want to see our working papers. They want to see our documents, and we have them at the ready. We don't want to go back 3 years and go, to our clients and say, do you remember the issues you had? Or do you remember what you did differently in 2020 or 2021? We act as if everybody's going to have an audit. So we're at the ready if they do get one, and we will defend our clients at no additional cost. So oftentimes it's a paper audit. It's case closed because now here's our documents. We have proof. We can defend it. Case closed. So I don't want people to feel like, these tax credits do not trigger an audit. Anybody could get the luck of the draw, but they do not trigger an audit, and we'll be there to help clients if they get one. But I would say none of my clients have had one to date. And I love that I can tell people that. So it's exciting. We rarely get
Awesome.
an audit as a firm, but if we do, we're at the ready.
Awesome. Wow, that's absolutely incredible. I mean, the stuff that you do and the stuff that you have to research, most people obviously don't have time to do so.
Yeah.
And that's why it's so important to talk to you about it. Now, with regards to money on the table, like you talked about it before, how much is actually left on the table that people don't realize?
Some of the statistics we have is that 60% of business owners are overpaying in taxes. That's a lot. People often ask me, how do you know if you have a good CPA? And I always say, are they bringing you tax credits and are they strategizing with you? And I bet 99% of the people I talk to are in that category. They're like, well, no, I just bring them my numbers. Like you said, I bring them my receipts, Fong, and they give me a number. So $1.5 billion in annual refunds went untouched. That's an incredible amount of money. And then I have another one that I wrote down that 75% of employers are eligible, yet more than 63% of ERC funds are going unclaimed. And that is probably the biggest thing. We are talking right before quarter two is about to start for 2023. And that is the main thing that, really, I hope people take away from today is that employee retention tax credit is about to end. Quarters will start to fall off in quarter two. Currently, there's 6 quarters available, and I just don't want to see people leaving that money on the table. It's a once in a lifetime opportunity, but what it is, Fong, is a refund of overpaid payroll taxes. So it is connected to COVID. Everybody that we've talked to seems to think that doesn't think they qualify. They think they had to have a decline of revenue. And that is one way to qualify, but it is not the only way. And so I want to make sure that nobody is wishing they'd heard about this when this is over, right? Always have a 5-minute conversation. We can email, we can even put the link in there for people to either get on my Calendly link, or they can click on a link and get a survey to get their own estimate. But at the end of the day, if people have 4 or 5 full-time employees, they want, and they had any pain points during COVID, did they have a decline of revenue? That's great, because that's a wonderful way to qualify, because if they had a quarter in 2020 or 2021 where they had a decline of revenue, the following quarter, they'll automatically get no questions asked. So it's kind of a twofer, right? So, but if they did not have a decline of revenue, which the vast majority of our companies did not, and we've done 4,000 of these recoveries so far, and recovered almost $1 billion in recovery. That's a lot of money to help our clients that they can do whatever they want with. But what they want to look at is, how is business, or how is commerce different in 2020 and 2021 than 2019? And, conferences weren't held. People had to work from home. People didn't come into their businesses. I live in Minnesota, and we were closed. And even when we reopened, only so many people could be in a business at one time. And I know a lot of states in the United States had that same issue. Restaurants could only reopen at 50% capacity for a long time. Some companies only could have takeout. So, hair salons were closed, dentists were closed. So even if they weren't closed, maybe they were partially closed. Supply chain issues were all over the news. There's still supply chain issues. So we just ask, how was commerce different in 20 and 21 than it was in 2019? And if they had any issues, let's at least have a conversation. So, and if people took the PPP, they may want to for sure look at it, because we're finding the vast majority of those people qualified.